U.S. economy unexpectedly shrank in the first quarter of this year as the trade deficit soared to a record high. Inflation began to weigh on consumer demand. The 1.4% drop much lower than the expected 1% gain from January to March. And it comes at an unusual time because unemployment is near a 50-year low and wages are rising at a healthy pace. Business journalist Shibani Joshi joins us now to put it in terms that we can all understand, Shibani. So, the markets rallied on Wall Street despite today's disappointing numbers. What does that mean?
Hi there, Nicole. Yep, completely shrugged off today, which has probably the average person scratching their head and saying, what gives? We saw the stock market up today, basically shrugging off all of this GDP information. And all of this is really related to digging into the numbers under the headline. Of course, yes, that headline number of 1.5%, 1.4% decline in GDP has caught all of our attention. But if you dig into the numbers and what the experts were talking about, the drop was tied to two specific things: a trade deficit and shrinking inventories. And yesterday I was on here, Nicole, talking about how important consumer spending is to propping up the economy, accounting for more than 60% of spending. And consumer spending was actually very strong in the last quarter, up almost 3%. Business spending was up almost 7%. And it's because of those two factors, the really strong, important pillars of the economy. That's why you didn't see any reaction out of Wall Street, basically shrugging off that a recession may or may not be coming. The jury's still out.
Yeah, I certainly was surprised today. Now, we are learning that the economy is shrinking, but Shibani, what does that actually mean?
Yeah, so, what we see is in very normal business cycles, Nicole, and in life are ebbs and flows. Things go well, and then they take a step back. And so we can expect, especially after blockbuster stock price gains in terms of what's happening on Wall Street, what's happening with corporate profits, we can expect some level of shrinkage. And so that's what investors are keeping an eye on. Now, slowing growth is different than receding growth, basically negative gains. And that is what we're starting to see pop up in corporate numbers. Today, we got numbers just about half an hour ago from Apple, giving us a good indication. People are still buying iPhones. The company had one of the strongest quarters it's had on record, giving us an indication that the consumer is still willing to spend. They're able to manage the supply chain issues. Again, we're getting these data points that people are spending. It may not be at the blockbuster levels they were at places like Amazon and Walmart when the pandemic was happening and they needed toilet paper and other things. The consumer is still strong, and that's why you really see a lot of wavering on the notion of whether or not we're going to have a recession.
All right, so the jury is still out, as you said. Shibani Joshi, thank you so much. Great talking to you again. Thank you for watching. Click the red subscribe button below so you can get more of NewsNation's fact-driven, unbiased coverage.